When you think of Walmart, I bet a certain image comes to mind. A huge, reliable, maybe even a little boring big box store. But what if I told you that's the old story, and that the real story is about its incredible transformation into a tech-powered, high-growth machine? Let's dive in. So that's the big question we're tackling today. Could this company, the symbol of stability and value, actually be one of the most exciting growth stories out there right now? To really figure that out, we have to start at the beginning.
Okay, so before we can even talk about where Walmart is going, you have to wrap your head around just how massive it is right now. And honestly, these numbers are kind of hard to believe.
Let's just start with revenue. For its 2026 fiscal year, Walmart brought in over $713 billion. I mean, that's a number so huge, it barely feels real. And how do they get there? Well, by serving an unbelievable 280 million customers. Not a year, not a month, but every single week. That's a level of reach that most companies can only dream about.
And get this, the team making all this happen? It's a global force of 2.1 million associates. That sheer scale, both in people and logistics, creates an efficiency that is almost impossible for anyone else to copy.
But look, it's one thing to be big, right? It's a whole other thing to be this profitable. Walmart's net income is huge, and what's really telling is that its profit growth is actually outpacing its sales growth. That screams efficiency.
So that brings us to the million-dollar question, doesn't it? In a world that's changing so fast, with digital everything and intense competition, is just being a giant enough?
Well, the answer to that question is what this next part is all about, because Walmart isn't just sitting still. Not at all. It has built this incredible growth machine with multiple engines, and it's taking them way beyond traditional retail.
Just look at their e-commerce. I mean, wow. In the fourth quarter, we're talking about digital sales jumping by more than 20% across the board. This is not a company playing catch-up anymore. They are absolutely a leader in blending physical stores and online shopping.
And now for the real kicker, a part of their business you probably have no idea about: advertising. This isn't some side hustle. It's now a multi-billion-dollar business that grew an insane 46% last year. They're turning all that shopper data into a high-margin ad machine that's starting to look a lot like a tech company.
And this is where it gets really smart. They've created what's called a flywheel. It works like this. They collect all this incredible shopper data, right? Then they sell super targeted ads to brands who get a great return. That ad revenue, it's super high margin. And what do they do with all that extra profit? They pour it right back into their core promise: everyday low prices. It's this beautiful self-powering cycle.
And hey, don't think that's the only growth engine firing up. Let's talk about Sam's Club. It's already a monster, bringing in nearly $100 billion. But the goal? The goal is to double that. And with membership income and e-commerce both soaring, it looks like they're well on their way.
Okay, so we've got massive scale. We've got exciting new growth engines. But what does all of this actually mean for someone holding the stock? Well, let's talk about one of the most dependable things in the entire market: the Walmart dividend.
53 consecutive years. Think about that. For more than half a century, through recessions, booms, busts, you name it, Walmart has raised its dividend payout. That's not just a track record, it's a powerful statement about financial stability and discipline.
And the best part? This isn't some risky payout they can't afford. They're only paying out about a third of what they earn. What happens to the other two-thirds? It gets plowed right back into the business, funding all that growth we were just talking about.
All right, this is all sounding pretty fantastic, right? So what's the catch? Well, for a lot of people, it comes down to one thing: the price of the stock. So let's dig into the valuation.
So you can look at it two ways. The traditional view says, whoa, that price-to-earnings ratio is way too high for a retailer. But the other side of the coin, the growth view, says, hold on, you're not buying just a retailer anymore. You're paying a premium for a new kind of company, a tech hybrid with a super profitable ad business and really solid earnings growth.
And it looks like the pros on Wall Street are buying that growth story. The general consensus is a strong buy. And most analysts think there's still plenty of room for the stock to run. That tells you they believe the quality is worth the price tag.
All right, so let's tie this all together. We've looked at the incredible scale, the new growth engines, that rock-solid dividend, and the whole valuation debate. So what's the final takeaway on Walmart today?
In business, people talk about a competitive moat, that special something that protects a company from its rivals. And Walmart's moat, it's not just deep, it's getting wider and wider. The combination of its physical footprint, that treasure trove of data,
and its push into automation, it's like a fortress that's just getting tougher and tougher for anyone else to attack.
Now, of course, no investment is a sure thing. There are risks. If people stop spending as much, that's a problem, and competition from places like Amazon is always fierce. But you have to weigh those risks against the strengths, a defensive business, all those different ways to grow, and of course, that dividend you can count on. It's a really interesting balance.
And that really leaves us with one big final question. When you put it all together, the safety of its core business with these powerful new engines of growth, has Walmart quietly turned into the ultimate all-weather stock? You know, the kind of company that can thrive no matter what the economy is doing? It's definitely something to think about. Thanks for joining me for this explainer.